Hey tax students, this is your teacher Roy with a video lecture for chapter number 1. There's a lot of detail in our chapter 1, so probably I'm going to divide up this video lecture into 2 or 3 parts. So this is part 1. The video lectures I prepared during this semester are going to be based upon the PowerPoint files provided by the publisher of our textbook. And if you want to see the complete PowerPoint file, go to our Laulima site, and here in this chapter resources tool, eventually you'll see subfolders for each numbered chapter we're going to be covering during the semester. So far I've just opened up this chapter number 1. And within that subfolder you can see lots of links, one of them being this one with the extension PPT for PowerPoint. So if you download the PowerPoint file, you can see even more detail to the slides than what I'm going to be covering in the video lecture. So before we take a look at the next slide in this PowerPoint file, let's talk about the different types of taxes people pay. The name of our class is called Individual Income Tax Preparation. So the type of tax we're dealing with here in our class is called income tax. It's based upon the amount of income you earn or make during the year. Now, the income you make can be reduced by certain types of costs or deductions. So typically you're going to have the amount of money you make during the year. Sometimes we call that revenue. All the different ways of making money. Then we're going to subtract out certain costs called deductions. And we're going to learn about one big deduction here in chapter 1 called a standard deduction. And then the remainder, or when you subtract out something, sometimes we call that netting or net, the remainder is called net income. Or the term we use in our tax class is called taxable income. Okay. So you'll see these terms in this chapter, taxable income. And that net income or taxable income is going to be multiplied by a tax rate typically stated as a percent or percentages. And we'll get into the actual percent or percentages in our next chapter, chapter 2. But then when you get your answer down here, multiplying the rate times the taxable income, you get the tax for the whole year. Again, this type of tax is based upon the amount of income you earn. So the full name of this tax is called net income tax. Now there's other types of taxes people pay, like maybe sales tax. You know that 4 or 4.5% you pay every time you go to the store. Or if you own real estate, you may be paying real estate taxes based upon the value of the property every year. Okay, so there's other types of taxes beyond these, but again, what we're focusing on in our class is called income or net income tax. Now, why does the government charge taxes? Of course, the obvious answer is to have money so it can pay off its costs of running the government. But there's other reasons why we have so complex tax rules that we have to learn. The government uses the tax system possibly to stimulate the economy, to give better treatment to certain types of businesses, or give them all the businesses a certain type of deduction to reduce the taxes, to motivate them to create jobs. Or maybe we want to have some type of effect on society to make sure people are treated well, that charities are funded, that education is promoted. And all of this can be done by making certain tax rules that are favorable in people's behaviors to motivate them to do certain things we want them to do. And really that's the main reason why the income tax system in our country is so complicated. And that's why you're taking this class. Now there's different types of people or taxpayers. The type of taxpayers we are, people, are called individuals. And again, we're going to be learning that throughout our whole semester in our Accounting 134 class. But there's other types of what we call business entities that are also subject to income taxes, like corporations or possibly partnerships. We have to figure out their taxable income. So if you continue taking the next tax class next semester, that's accounting. Again, our class is Accounting 134. And if you pass with a C or better, you can continue next semester to take Accounting 137, where you're going to be learning corporate and partnership taxation. In addition to something called sole proprietorships or limited liability companies or rental income as a landlord, those items are covered next semester, yeah? And you can continue using the same textbook you're using now here in 134. You don't have to buy anything special, and we'll continue using that in the next tax class in spring for 137. We're learning a simple formula. You can see all we're doing here is adding or subtracting to get the remainder, subtracting some more. And you saw some of these terms before. Yeah, I multiplied this by a certain tax rate to get the tax for the year. Okay, so this is a simple formula compared to the actual tax form. But what I want to do for the next few minutes is to take a look at the form, even though it's not introduced to us until chapter 2. And you'll see all of the same terms you see on this screen also on the tax form. So let me pull in my tax form here. The main tax form we're going to learn to prepare during the semester is called Form 1040. Forms have different numbers or different letters. Yeah, this is the main one. Individuals like you and I file with the government every year. You gotta make sure you have the correct year version. What we're learning in our current textbook is 2019 tax returns or tax rules. So if you try to fill in a 2018 form, you're going to get the wrong answers, the wrong tax as compared to our 2019 tax returns. And if you use the 2019 form when you're trying to fill the 2020 tax return, again, you're going to get the wrong answer. So make sure you're always using the correct year version. Now here at the very top, the first thing we're asked to fill in is the taxpayer's filing status. You can see 5 different checkboxes here listed across the form. And we're going to learn what qualifies a taxpayer to be one of these filing statuses or choosing one of the filing statuses. Depending upon which one you choose will determine a deduction further down the form here. Let's take a look at that line already called standard deduction they're going to be subtracting out here. Again, one of the main purposes of determining your filing status is to eventually figure out the dollar amount you're going to be subtracting down below as a standard deduction. And depending upon which one you pick, you'll get a different dollar amount to deduct as a standard deduction. The next section here, the taxpayer's name, if it's a joint return with a spouse and you're filing a jointly, combining all of their income and deductions together in one tax return, you have to fill in both names over here. If they're married, you could file separately. You don't have to file jointly. It's up to the 2 taxpayer spouses, but both have to agree to file jointly if it's going to be a joint return. If only one wants to file jointly and the other doesn't, then both have to file separate returns. But if it's a joint return, you put down their names over here, these 2 lines, and their social security numbers, their address, which can be a P.O. box if they want to, but this is the official address that the IRS is going to correspond with the taxpayers. And let's take a look at the next section here, again called standard deduction. So let's first go down here again. We saw this line called standard deduction, and off to the left side in the margin, based upon the filing status, it will assign a dollar amount to deduct for the standard deduction. Again, the filing status and the related standard, the regular standard deduction. But there are certain situations where this regular amount can be increased by more deduction. So if you answer, let's say that you were, the taxpayer was born before this date, that means that at the end of 2019, the taxpayer was age 65 or older. You're going to get an additional standard deduction for age. If the taxpayer was legally blind, then you're going to get an additional standard deduction. So these two boxes here apply to the taxpayer. And if you have a spouse filing a joint return, there can be even more standard deduction if the spouse is over 65 or blind. Okay, so more boxes checked off here, the larger these amounts are going to be deducted here in line 9. The next section deals with dependents being claimed by our taxpayer listed up here. The taxpayer cannot claim themselves, yeah? They're the taxpayer listed up here. Typically, dependents, when people think of them, that's the kids, the children that's the taxpayer supporting. But we'll find out there's two different categories of dependents here in chapter number 1. One category is called qualifying child or children. Another category is called other qualifying relatives. And in either case, there's going to be something called a tax credit. Yeah, a tax credit that we're going to calculate not here in chapter 1, but in chapter 2. Yeah, more tax credits, like more tax deductions, the less taxes our taxpayer is going to pay. Okay, so we're going to determine who is going to be dependents here we can put down. And then we're going to have their name, their social security number, how the dependents are related to the taxpayer, and whether that dependent is a qualifying child, which is better than a qualifying relative, because we're going to get more credit here than over here. The next sections, lines 1 through 7, list out the different types of revenue or income our taxpayer can earn. And this is not a 100% list of all the different ways of making money. In fact, if you don't see the way you make money here from lines 1 through 6, there's another form called a Schedule 1 that you would need to complete and list out those other ways of making money. And you would subtotal it here and add it to all the other income you have to get a line called total income, line 7B. Our textbook calls this probably by a better name. Let's see if I can write it in here. The textbook calls it gross income. Then in the next line, line 8A, something called adjustments are going to be subtracted out. And we're going to learn these types of income up here in chapter 3. And adjustments we're going to learn in detail in chapter 4. And it's kind of listed out in that same Schedule 1 here as compared to other income up here. Yeah, Schedule 1. So we're going to subtract out adjustments here. Yeah, minus the adjustments. And in the next line, you can see the important words here. It's called adjusted gross income, or we abbreviate that AGI, adjusted gross income, which is a very important number on the tax return, on the tax form, because it may affect the income we report up here. It may affect the deductions we subtract over here. And then the next thing we're going to put down in line 9, we already saw, is the taxpayer's standard deduction amount. Based upon this numbers here, plus maybe a little bit more based upon if we check off boxes over here. And when we subtract out that standard deduction, we're going to get that taxable income number I mentioned, I wrote on that first slide. And then the actual tax is then calculated back on the next page over here, which we'll get into in chapter 2, yeah, in more detail. But that's an overview of the different numbers that go into the calculation to get to this taxable income. And we're going to go into more detail as we go through more slides here in our PowerPoint file, yeah? So continue into the next video to see more detail, yeah?